Back at it for another Mike and Mario show. Happy Friday to everyone. Hope everyone's doing well. And lots of things to talk about from this past week, as well as things that are coming in the future. But before we do that, Mario, how you doing, my friend?
I'm doing well, Mike, and you?
Excellent. Excellent. It's Friday. I'm excited, man, as always, to connect and just to look back over this prior week and try to make sense of all the madness. We have CPI numbers out. We have the great political resignations popping up out of nowhere. We have gold, silver slam down, all that good stuff, man. So typical stuff. But before we move forward, how do you want to start off? What do you want to touch off with? First of all, you had a nice little trip as well.
Yeah,
I had that as well.
Yeah. Where can we start? I mean, you were talking about the banking system. You think it's going to have a tough time?
Yeah.
In the second half of the year. We saw, I think, a few days ago, maybe yesterday, or I don't remember exactly, but JP Morgan, their earnings came out and they weren't very good.
Yeah.
And also in China, we're seeing, I don't know if you remember, I sent you like a link of people protesting outside a bank in China.
Yeah.
So the situation there is getting worse.
Right.
And it's normal because if the economy is doing badly and we're going to go into a recession, the banks are going to be a focal point because our system is a credit-based system where the banks are the engine of credit.
Right, 100%. And speaking of which, it was on Wednesday actually, and so I actually ranted on a little bit earlier. But Jamie Dimon. I said JP Dimon. Jamie Dimon is not only has he mentioned a tsunami that's coming, or hurricane, or however he described it, but yet he's been very vocal against the same entity, i.e. the Federal Reserve, that's a shareholder, or his company is a shareholder in the actual bank itself. But he's been very vocal in a very negative sense. And so this headline here caught my attention earlier. How Dimon rips Fed stress test is terrible way to run the financial system after his bank halts buybacks. And so just that little sentence there, lots of things come from that. But because they have to, halt their stock buyback program, he's talking about how that's a financial system and how all this is horrible. And anyway, so it has a lot to do with their lack of earnings and, of course, all the other banks. And then here's another little headline. Market downturn weighs on Wells Fargo's profits. So we have two of the bigger banks in our country here probably falling victim to the liquidity crunch that's underway and the lack thereof of stimulus that kept things floating. So as I mentioned about, the second half of this year, because not only is the European situation very problematic with the banks in different countries, but I think we're going to hear a lot more about the issues from the banking sector. And that's not going to be a good thing because that plays into the whole Fed's pivot or not, because they're going to have to make some tough decisions, or the banking section, as well as everything else, stocks and real estate, all those other things will be heavily impacted. So, but this is just the beginning, I think, in a sense.
Yeah, and I think the fact that the yield curve is inverting, that hurts banks because they usually borrow short term, and then lend long term. So they're not making a profit there. And I think the fact that we've had the worst stock market and bond market, for the first 6 months since 1970, banks, they need those assets to keep doing well in order to back up their lending.
Yeah.
So that's probably one of the reasons why as well. And stress tests, I agree with Jamie Dimon on that. Stress tests are useless, I think.
It's comical. And it's the fact that after the Great Reset or the Great Recession, the banking sector, they gave that suggestion to, I guess, help prove the liquidity side of things. But it's farcical because
I think the best thing to make banks safe is to make them private partnerships. So you can't banks can't become corporations, and the people who run the bank, they own the bank, and if the bank goes bust, they lose everything. That's the best way to run a bank. And the other thing as well, not having a central bank to bail them out through
Right.
the back of the taxpayers. That would make banks very safe. But of course, Jamie Dimon wouldn't go, and he wouldn't want to talk about that because he want you and I and everyone else to keep making him really rich.
Right. And I watched a short clip from, I think it was one of the senators talking to, I think, a bank executive about another coming banking crisis. What will be the response? And he's talked about bailout. And then the guy said that, we can't bail out. You guys made it difficult to where there had to be an orderly liquidation of the banking assets, i.e. bail in, is what he was probably hinting at. So bailouts are probably off the table, but then bail in, we know, of course, is on the table if we get to that point where there's a systemic event. And on top of that, JP Morgan, Wells Fargo, and all the other big banks, because of the systemic nature of those banks, like, not letting them go bankrupt means the daisy chain of events would unfold, which is be the whole entire monetary system.
Yeah, too
So
big to fail.
yeah, they're too big to fail, but yeah, take down the world with them. So, but then
Mm.
again, here is just came across a quick little update about the whole protest from China. So it looks like China bank customers to get their deposits back after the protest, and so I guess them camping out and expressing their displeasure and not having access to their funds, according to this source here, they will be getting something back or have access to them. But just more issues dealing with banks and people being able to get what they think is theirs. So this is a very interesting headline, I think. But anyway, let's keep it moving. So let's touch on briefly. I want to just show this little graph here. I think this is interesting. So here we had midweek, the U.S. Consumer Price Index year over year, and just look at the, the CPI.
Yeah.
Over the last 5 years here, and I went back and just saw how, in comparison to yesteryears, 70s and 80s, we still got a lot of room to go, don't you think?
Oh yeah, and I think the thing is, in the 80s and 70s they calculated it differently.
Yeah.
So this should be more like 20 now.
Right.
But,
And that's where that John Williams.
Yeah, and I think we're still hearing from Fed officials. I think it was Bullard. I think it was Tavi Costa. He retweeted a comment by Bullard, and Bullard said that the Fed today has a lot more credibility than the Volcker Fed.
Yeah.
And Tavi Costa's comment was, "What a clown." To say that the Fed now has more credibility than Paul Volcker's Fed.
Here we go.
Seriously, what a clown. And I agree with Tavi Costa there. And I think the Fed is they've got no way out unless they want to really have Sri Lanka to the power of 50 in the US and Western Europe, because the only way to stop inflationary pressures or stop the money creation or credit creation, which is inflation, is to raise rates above 9%. You have to raise it at least to 10, maybe even more.
Yeah.
And that's just going to implode the whole economy. The U.S. government would probably go bankrupt. Well, they probably wouldn't, but they'd just have to outright print money without lending just to pay it off, and could have hyperinflation or a collapse where all the banks go bust, everything goes bust, no one has any government can't pay benefits anymore, not benefits, but their obligations to like the Social Security and Medicare. It would be a nightmare. So I don't see the inflation stopping. And in the 70s, I think it was from around the mid 70s to like 77, it did slow down, but then it just picked up right again. And back then, at least interest rates were quite high, nominal terms.
Yeah.
They might have been a little negative, but they're not as negative as now. And now the Wall Street and the central bankers, they use this inflation expectation. They're saying, oh, in 5 years' time, inflation will be at 2%. So they tell us that actually the real rate is positive right now, which is rubbish. It's something they never used in the 70s. The real rate right now is 9% CPI minus, let's say, 10 years around 3. So minus 6.
Yeah.
And then if you use Fed funds, it's 1.5 to 1.7.
Yeah.
So it's around well, it's 6,
7.5,
7.
8-ish.
Yeah.
Yeah.
So how can they say that the real rate is now positive? It's like a fabrication. It's just trying to keep people playing this game, keeping
Yeah.
the frog in the boiling water.
Yeah. And even with this little visual aid here representing, this is the Fed funds and the CPI, even though we know the numbers are bogus, they can't even adjust for just this difference here. Nevertheless, if we were actually given the real CPI numbers, which is in the high
Oh
teens,
yeah.
and so
Yeah.
like literally they would have to go well beyond
Yeah.
that, which would
So
equate to what Volcker did.
interest rates would have to be over 20% really to stop it.
Right. Right. And then that right there, as you mentioned, will be extremely problematic. The entire financial system would seize up and game over. And then we move on. But yeah, what's amazing to me with all this negative market activity, in a sense, we got retail sales down, CPI continue to go up, and all the other things without even talking about gold and silver. They have managed to do their best of making sure gold and silver doesn't reflect in the true safe haven role that it should be showing right now in dollar terms in particular.
Yeah,
it's amazing. It's yeah. Anyway,
frustrating because in dollars especially. I mean, it has done
just in dollars,
fairly good job in euros and pounds.
Yeah.
But to think that in 2011, the Fed's balance sheet was below. I don't know, it was 2-3 trillion, and now we're at 9.
Yeah.
And gold is still below that 1900 level. It
Yeah.
doesn't make sense. But if you look back at the gold and silver price chart from the 70s, it was frustrating from like 75 to 77, 78. So you can have period, they will manipulate it. I think someone tweeted out today that if the gold market didn't trade in US hours, when gold always goes down, like in the beginning of the day, gold, if you stripped out that trading for the last 15, 20 years, gold would be at 5,000.
Yeah. Where is that at? Let me.
I'm not sure where I saw that.
Yep. I got it right here. Let me show that. I'll show it here.
Oh yeah, there you go. Yeah.
So yeah, gold would be 5,000 today if you could just take out the 2 hours from 8:30 to 10:30 in New York every day, to refer to how this boy just markets open up.
And I noticed that back in already 2002. I mean, it's been happening almost every day for 20 years. New York comes in and they bash gold. And by New York, a lot of times it's also around 8:20 a.m. New York, which is fairly early. But that's actually the official open for COMEX. COMEX trades almost 24/7, but let's say Friday, it's the trading day for Friday officially starts 8:20. So let's say the Fed comes in, the banks come in, or the funds. The official open for gold futures is 8:20, even though they can trade before. But that's when a lot of people get a market on open orders, and that's why it happens at that time. And I noticed that because I bought some gold, like some, not futures, I bought real coins. The first coins I bought were Krugerrands. And then you start looking at the markets, and I looked at markets every day because I was a broker in bonds, but I started following gold, and I noticed those things, and I could tell, well, this thing is manipulated because bond markets, there's not a time when the treasuries or the German government bond futures where they always do the same. It's more random, but with gold, it was always the same thing.
Yeah. Interesting. And I was responding to some comments earlier about how people, because I was so aggressive in just sharing my concerns with the Bitcoin maximalists on Twitter, people were coming at me now like, Mike, and they tag you in it too, I think, about, Mike, gold is not saving me right now. What happened to your silver and your gold? I'm like, man, you look at it from completely the wrong viewpoint.
Well, yeah, I can understand why people are saying that, because it
Yeah.
feels like it's not. We got the inflation part right. Everything I've been calling for, that we're going to have rising prices and consumer prices, and that gold and silver will protect you. And I still think they will in the long term. Right now, I've been proven wrong. But in the long term, I think I'll be proven right. And I see a lot of people saying, well, the milkshake theory was right. But I think that's early days as well, because the US dollar is the best shirt in in a basket of dirty shirts. And eventually the dollar, the only way it can really collapse is against real things.
Right. And that's where like the short-sightedness of people, just to say that, the dollar price of gold and silver is not performing the way that they wanted to or expected to based on all the other metrics. Don't look at it just in USD terms. Or like there's 180 or something other fiat currencies out there, and look at the emerging markets. Like I was looking at just last week, and so I'll put on the screen here. Just last week in Chile, the Chilean peso literally just fell off the cliff. And this is the Chilean peso within the last year. And if I was to zoom in to just the last 2 months, the 2 months in gold terms, so Chilean peso in gold terms, if you were a holder of precious metals as a citizen of Chile, rather than just being in solely fiat currency and digits representations of pesos, you would have done tremendously well. But yet your bank account has suffered severely in relation to purchasing power. And so that's just one country. We got Sri Lanka as a second country. We got, so I can go country to country showing you how gold has served its purpose as a hedge, as a protective tool against fiat currency destruction. So the USD, just be patient, wait, give it time. And it, God forbid we see, but just be patient, man. Like, we have the reserve currency of the world, which means that we have more of a longer lifeline than all the
other and the dollar is the base of all the fiat currencies.
Correct.
So they're gonna disappear first, and the dollar will go as well.
Right.
But I think we've got Chris.
Let's Chris, appreciate you, man. It says, what do you think will ultimately happen that will bring inflation down? What timeline could we be looking at? Thanks. What do you think will ultimately happen that will bring down inflation? The asset bubbles bursting could definitely hinder the sticker price of a lot of items. Like I was mentioning last week about the whole hyperstagflation. We're going to see, and this is just my opinion, we're going to see a clear distinction between the real world items we need and the availability or unavailability to get those items, and what we have to pay for them, which might continue to go up. I don't see that actually coming down, but in reference to the other asset classes, there might be a correction there, but I think more so refers to the what pricing are you actually trying to look at when it comes to inflation.
I have my view of that question. When will inflation come down? I don't think it will, because I look at inflation as the increase of currency and credit. And in the fiat currency system, if you stop inflating it, it collapses. So there will be a time when the inflation ends, but that will be in a hyperinflation. So the only way we'll get almost no inflation and sound money is in the new system. In the current system, I don't see inflation ever ending, because it hasn't. Since 1971. Everything the currency is getting, more and more worthless. So and if they really try to bring rising prices to zero, they'll destroy the system. So there's no way out. So that's my my view on it. But you could have what you're talking about here, correction in the stock and bond market. You could stop the wealth effect. You could have some things go down in price, because the Austrians, they say you can inflate the currency system, but you could have prices going up and down.
Right.
That's the difference. But I don't see them stopping the the inflation because the system depends on it. It's like how can you if an alcoholic stops
Mhm.
drinking,
Right.
you know,
You
it's
go through severe withdrawals and have it
yeah.
more issues on top of that. But I think the sticker price of the everyday items we need will always go up just
Mm,
because we're going to have a supply issue. Like, at some point, the grocery stores will not have the abundance of selection that it does right now. Therefore, the little bit of items that will be there, well, you'll have to pay more for it. And that type of, consumer price
yeah.
inflation is going to
I,
be
I yeah.
all the
I
way
think
until.
I think Chris's question is probably because a lot of people still listen to the mainstream
Mhm.
economists, and their view is that just by bringing down the stock market and bonds and real estate, it will cool things down.
Mhm.
So we and inflation will disappear. But I think that's totally bogus.
Mhm.
And like you said, yeah, we might get a bear market in stocks and bonds, but real things that we need, that's going to continue to be very tough. So hyperstagflation. So, and some people are even saying though that once they pivot the Fed, some people are there's some analysts out there, technical
Mhm.
analysts, who still see the S&P going to almost 6,000 before the end of the year, but then completely collapsing. So it's all a mess
Yeah.
anyway.
Speaking of which, there's another question out here from, let me see, I saw it. Mr. LBP, low blood pressure, says, how you guys following the Indian rupee to dollar? See what happens. Don't toe the line. And so I just popped up something. I have seen it, but haven't talked about it. But it says India's rupee briefly crosses the 80 mark against the US dollar.
Hmm.
And so they're having some serious problems over there. Indian rupee has been grappling with multiple macroeconomic crises, consistent simultaneously, yet the Asians' worst performing currency.
Yeah, I can see that. Yeah, it was like let's see, beginning of the year. Uh it was trading around 75. We're now at almost 80. I mean, it's yeah. I mean, I think in the beginning of the year, like the first 2 3 months, some emerging market currencies are doing really well, like the
Yeah.
real. The real was like, but now emerging market currencies are getting hit. Um, but I think what he means there is because India is aligning itself to the
Mhm.
BRICS, and maybe the Americans don't like that. Could they be? Who knows?
Somehow, some way impacted. So over the last month, yeah, from 70s. Yeah, so yeah, but here's the thing. Look at the last 10 years. Let's see what we got here.
Yeah, I mean, the Indian rupee has always been a really bad currency, and that's why Indians buy gold.
Yeah.
It's not just geopolitically. I
Now
think.
let's measure the Indian rupee against gold over the last 10 years. So in 2013, 77,000 rupees. As of today, it'll cost you, what is that, 135 rupees.
And it
So,
could, yeah, low blood pressure. It could also be the fact that all fiat currencies are
mhm,
now, going the way of the
right,
dodo bird.
right.
You look at the Japanese yen is done pretty bad as well,
Yeah.
and the Japan is an ally of the U.S. So maybe it's more the fact that fiat currencies are sinking, and
Mhm,
as we said earlier, I think the dollar will be the last one to go.
mhm. Here's
This,
a Japanese
yeah,
yen versus
it looks,
gold.
yeah, it looks similar to the rupee chart.
Right. And so I frequently go through a type. I use gold as a standard to measure the nominal price in fiat currencies, and every currency, bar even the dollar, is gone up substantially from about 1,100 or so in this time in this 2 year time frame up to 1,700, which still is improvement in reference to the gold doing what it was supposed to do. But in all the other currencies that you just mentioned, like they're already all time highs. Every other currency is pretty much all time high, barring some of the G7 nations. And so that's an indication that gold has performed quite well in this
Oh yeah,
environment. So just don't look at the USD price. Once again, for those out there
yeah.
that's
People, they get too bogged down in the short term
right.
and the noise.
Good point.
If uh, I mean, if governments were shrinking their size, if politicians were listening to people, if we weren't waging any wars, If the Fed was like really raising rates and things were good, then gold would probably, you have to question whether gold is going to really do well. And by
Right.
doing well, I mean that question whether the fiat currencies were going to do that badly. But
Yeah.
I fear currency is just a reflection of you know, uh, the markets and investors' faith and confidence in the people who are running everything. And I right now, I mean, I don't have any faith and confidence in anything. And I can give you an example of, I told you I was in Italy at this symposium, and
Mhm.
one of the guys there was an elderly guy from the States, and he worked for the U.S. government all his life.
Mhm.
And in one of the lectures, he you could ask questions, and he said, "Oh, I just wanted to add that um, I've been a patriot all my life," but he said, uh, "I don't have any confidence in any institution anymore." And this is a guy who worked for the State Department in
Right.
the US that I met there. So it's not just you and me, it's like people who are actually working for government who are saying these things. So
Yeah. Very true. Yeah. And so I've seen statistics saying trust is an all-time low in the government institutions as well as financial institutions
mm,
as well. So
so the only reason that gold is not reflecting that right now is because they can still manipulate it with a lot of paper.
and that's those algorithms and those computer tradings is coming
Yeah.
in at 820, as you say. Here's a question from Matthew: says, "Can China? I'm assuming he meant can the Chinese yuan and the ruble collapse when the U.S. dollar falls?" And so I'm trying to. I
I
don't.
I I'll
Can the Chinese
I
yuan
think
and
I
ruble
think the
collapse?
Chinese yuan will have a tougher time, but I
Mhm.
think the ruble in the Russians in the last few years, they've gotten rid of almost all their dollar reserves.
Mhm.
They've been buying gold and silver. They have a lot of no. I think the ruble will survive. It might be affected a little bit,
Yeah.
but I think the yuan will have a tougher time. But eventually, they will come back stronger because I think
Mhm.
they have a lot of gold
Yeah.
that they're not telling us.
Right. So did that. So here and also here's something that gold weighted against the ruble over this same 10-year stretch is the one of the only currencies that shows something different in comparison to all the other currencies. And so here we have over the last year with this whole, get up to 270,000 rubles. Now it's back down to 100,000, and it's dang near as low as it was in 2016, 17 as far as how many fiat rubles to get an ounce of gold. But what do you think? Like, so the ruble has proven to be just as just as good as gold in a sense for the for the Russian people rather over the last 3 or 4 months in particular. Do you think by Russia deciding to just mention gold and have their central bank out there willing to transact in gold has led to the strength of the ruble against gold over the last couple of months? And is this like the framework for what we're going to see come soon with this alternative currency they're talking about, you think?
Well, I think that spike to 270 was, a bit of uh, a blip.
Mm-hmm.
Just like it's a lot more to do also with the fact that the ruble dropped versus the dollar, and then
Mm-hmm.
it strengthened again.
Yeah.
But I think Rafi Farber of the Endgame Investor,
Mm-hmm.
he has said that he looked into it. I haven't looked at it myself, but
Mm-hmm.
since 2006, if you look at gold reserves,
Mm-hmm.
how the Russians have increased it, it's pretty much matched the money supply growth that they've had. So
Mm-hmm.
I think they've been trying to run like a de facto gold standard. So yeah, the ruble has been a pretty good currency, even though a lot of Russians until recently they held a lot of dollars,
Yeah.
under the mattress, so to speak. But
Yeah.
now that's finished. Now I think the Russian people, they're
Yeah.
behind their leaders more than
Right.
we are behind ours, and the fact that you can't transact in dollars as a Russian is going to accelerate.
Mhm.
And I think they also made it legal now for Russians to buy gold as investment.
Right. And on top of the currency swaps they have with those agreements with pretty much all the BRIC nations, as well as the soon to be new inductees into the BRICS Plus,
Yeah.
which is so they're about to literally change the game completely. And so I just wanted to just show you guys that well before current time frame we're in now, according to the chart here, Russia was getting their weight up substantially, anticipating the day where they would definitely need to rely upon this for whatever reason they were going to need it for.
Well, I think Russia, they're kind of like a gold bug.
The gold bug nation.
They've been, yeah, they have. I think because they even know about the gold manipulation. That the bullion banks the central banks lease gold to the bullion banks, and they turn around and sell like that. Let's say they lease a ton to JP Morgan. JP Morgan goes around and sells 100 tons off 1 ton. They leverage everything. And there was the article the other day of Peter Hambro. Did you see? I made a video about it. Peter Hambro was a gold dealer in the LBMA in the 70s. He was talking about that. We only doubt in paper, he said. One day, all these paper claims, when people are going to want the physical, they won't be there. And the Russians know that because one of Putin's economic advisor went to the GATA conference back in 2005 in Dawson City. Bill Murphy of GATA, who's trying to expose for over 20 years the price manipulation. He had a Russian guy there and economic advisor to Putin. So they know what's going on in terms of the manipulation. Maybe they haven't really come out and exposed it because it's benefited them because they've been able to buy gold on the cheap.
Right. And it's benefited us as well because we are aware that the manipulation is there. So it buys us more time as well because when the game is up, the game is up. There's no going back. Yeah. So
someone might ask, what if they never stop manipulating it? Well, they have to because if they manipulate it for too long, they'll eventually run out of the real thing because they'll keep the price so low. They can't keep doing it forever. Just like they couldn't in the 60s when it was overt. They had the London gold pool. They had to stop that because they're running out of gold.
Yeah. And on top of that, between now and the time that the system actually, caves in on itself, that's the whole end of the debt Ponzi scheme. Like, that's when the dollar finally goes bye-bye. However,
and you won't once you can't price an ounce of gold because the dollar becomes worthless, no one's gonna want to sell it. So I think who used the word unobtainium, you won't be able to get anything. I think it was Michael Maloney or maybe Jim Rickards, someone like that.
And I think at that moment it'll be quite obvious that there'll be a new benchmark pricing mechanism, like some medium of exchange that the world will recognize
will be gold and silver.
Right. And that's going to be the best way to reinstate confidence back into any type of system. Like, you won't be able to trust your government whatsoever.
And people always, when you say that, well, it will be gold and silver, and say, oh, well, how are we going to know what it's worth? Well, people learn very quickly. You start dealing with a gram of gold or a tenth of an ounce or an ounce of silver. They will know. It's prices are just exchange ratios. So they will know that, they'll take a nice steak for maybe $50, and but it's not going to be fixed. Of course, what will be fixed is the weight of the money and the fineness. That's what people don't get. I think Milton Friedman, he has a lot to answer for because he said, "Oh, money should be traded in a free market, in the forex market." But no, money is a measure of value, and you can't change the weight of the $50.
Yeah.
It has to be fixed. And unfortunately, that's what fiat currency does. There's no anchor to, and that's why our economies, our financial system, monetary system are so screwed up because we don't have an anchor. Can you imagine if you played an American, a football game, and the yard changed every second. Someone say, "Oh, you got your first down," and then they come, "Oh no, the yard just you didn't get your what." Then that's what they do with money, though.
Right. So since you're talking, I thought of a visual I put together a while ago to show you the properties of money that I put together a while ago, and this was geared towards the cryptocurrency community when I first created this. But according to divisible, fungible, portable, durable, acceptable, uniform, scarcity, store value, anonymity. So I was highlighting an anonymity part about how fiat currency, without credit card system, whatever, where they can see those transactions, but gold and silver in your hands, they have a lot more good properties and relevance to money.
Yeah.
According to these measurements here.
Well, that portable, I see that you put moderate. Is that like taking it to another country? Or
right? So that's that, like, you may or may not, you can't get far with too much of it, but yet
because I went to Italy this week, and I went last Sunday, and I took a few silver coins, and I took 3 little quarter-ounce Krugerrands with me, and I just put it in my pocket with my other change. And that security at the airport, I just put it in the box, and no one knows. A lot of people don't even know what gold and silver look like. Yeah. Of course, if I'd put like that huge 400-ounce brick gold, that would, you can put quite a few coins in there. Like, the best coin are the sovereigns, because they're like a quarter of an ounce.
Yeah,
you could put like 5 or 6 in your pocket, and they won't, put it in the box to go through the security.
Yeah.
And they, if it's mixed with other coins, they won't even know.
Yeah.
So it is pretty portable. I didn't spend any. I just took some. Well, he's not joking though. Swallowing. No, there are gold bars that are rounded, very soft. Yeah. I have one, and they were made for that, for smuggling. So you swallow it. Let's say, I think the Indians did a lot of that. They swallow because they, let's say they go from Dubai back to India, and there's a lot of restrictions. You swallow a gold bar, and you get to India, and then you go to the toilet, and it comes out the other end. It does, but it has to be a special rounded bar. You don't want the sharp bars, because you're gonna hurt yourself. But people do that.
Because I've seen enough articles, right? So I just grabbed the article here. It says travelers caught with gold hid under their topies in their socks. It says a picture. Here's a picture. Okay, it's not popping up, but
the best thing is to hide it in plain sight, like I did. Just put it in your pocket, and they won't ask any questions.
Right, and that's where. Let me get rid of this. Hold on a second. Let me.
And if they did stop me and say, "What is that?" I said, "They're just coins."
Yeah. Yeah, and that's where jewelry, bracelets, gold bracelets. There's a couple companies that actually sell 24 karat gold necklaces, bracelets.
Oh, yeah.
I mean, all types of things where you can casually sneak through. But then again, you got to protect your neck. So
the other thing as well, let's say there's a revolution in England, for example, and we have to get out. I could take a bar that I have that I could swallow. And it's, I think, 1.6 ounces, and we could go to another country. And with that, I could start, you can't really, it will help, it will help you get, maybe rent a place for a few months and then get a job, because if you don't have an address, it's difficult to get a job. So it's more like an insurance as well in times of trouble.
Now, so speaking of which, I want to. So, I had an article here. I want to get your thoughts on what's happening in the UK with the.
I think. Rochelle Fernandez is saying that the reason why the Indians do that is because you can't import gold into India, and it's like a contraband. So you can only import if you're a jeweler or a dentist, according to her.
Yeah. Good stuff, Rochelle. Give us the rundown on the cost of living payments in the UK that's, I guess, already rolled out, or what are you hearing or seeing out there?
Yeah, I mean, I'm not eligible to get many of these payments.
Mm-hmm.
I think the only one I'll be getting, and everyone will be getting it, even a billionaire, is
Mm-hmm.
400 pounds off
Yeah.
your utility bill, gas and electricity. But I think that's only going to be made from October.
Mm-hmm.
But yeah, I mean, it seems to be everywhere, everywhere where in the West,
Yeah.
where they call it cost of living. It is a cost of living crisis, but it's happening because of inflation. And
Right.
then, but what they these people are so ignorant of economics that they think that you give people more money, it will help them.
Yeah.
Uh, it might seem the right thing to do, but uh, they did that in Weimar Germany, and they printed more money because they
Mm-hmm.
thought it would stop the inflation.
Yeah.
So they're doing the same thing here in Italy. I think yesterday the reason why Draghi offered his resignation, it was refused, of course,
Mm-hmm.
was that there was a bill to to be passed in the parliament yesterday. It was another one of these things, 26 billion euro bill to help people
Citizens.
struggling,
Yeah.
and Italy, the Italian treasury is having to be bailed out by the ECB, and here you have the Italian treasury, the government trying to give billions to the public. I mean, at one point, the countries that have been frugal, like the Netherlands, Germany, and others,
Mm-hmm.
they're going to say, "Well, we don't want this anymore. Why should we keep bailing out the Italians?"
Yeah. Yeah.
But yeah, in the UK, they're doing it here.
So that, that
It will help in the short term, but then in 6-9 months, we're gonna have even more prices going up, and
right.
then they're gonna say, "Oh, we need another one." It's
Right.
just
So it's a ongoing spiraling out of control, but yet it will provide a little slight blip up in consumer spending, which is what they want to try to make it seem as if, oh, the economy is recovering. People are shopping, they're spending,
yeah,
especially heading into the holiday season this year. Like I'd imagine here in the U.S., there's going to be talk of some type of injection coming soon, just because yeah, Christmas is going to be mighty bleak for a lot of people unless they do so. Let's get to some questions. So let's open up the chat and let's get some questions, even though we've got a couple. Feel free to throw out some questions, thoughts, ideas.
Stephen Edwards, where do you
What we
see
got?
the interest rates going in the EU? Well, there isn't one EU rate. I guess there is a euro, the base rate
Mm-hmm.
by the ECB, which is negative still. But the thing about the euros, it's the eurozone actually, because there are countries in the EU who are not in the euro, like Sweden or Denmark. But the euro rate, it's still negative, the ECB base rate. But then you have different countries. You don't have a euro treasury, so it's not like the US. So Italian 10-year yields, they got up above 4% a month ago, but the German yield is like 1%. So it depends. What I see happening is countries like Portugal, Italy, Ireland, Greece, and Spain, the periphery, their yields are going to go up a lot more than the German, for example.
So I'm just looking at typing in global interest rates, and so this boy they just have it at 0, and it's actually negative. But
Yeah, I thought it was negative. Yeah,
yeah, so they just got it at 0
maybe
here.
that's a reference
Oh,
rate.
this is actually old. This is outdated. Come to
Yeah,
find out, because
yeah.
it's got 2016. So that's funny.
Let's
But
see. Let me have a look where it is exactly. CD base rate. Uh,
let me see. I found something.
what is it? Here? Minus 0.5. So it's minus 0.5%.
Yeah, and so I've noticed over the last couple of weeks, rather, Canada had a little hike, Chile, and so we got all these nations. Just this week, we had 4: South Korea, Canada, Chile, and New Zealand. They all 0.5 point, 3/4 of a point, it's a whole point in Canada, and 0.5 point in South Korea. So yeah.
Dart Vader is asking how come the BIS and central banks can manipulate the 10-year yield? Well, they do it through QE, Darth Vader. That's what QE is all about. They do it also by forward guidance. Forward guidance is telling the market that you're going to do something, so you
Yeah.
keep speculators at bay. The Bank of Japan, they got something called the yield curve control, where they say we're going to defend this certain level, 0.25%, and they'll say, if the rate starts going above that, we will buy
Yeah.
an unlimited amount of JGBs. And how do they buy that? Well, they just create reserves out of thin air, which is what QE is.
Yeah. Here's a Roger Rose says, what does the silver chart say? Buy or wait? And so can't give financial
Well,
advice.
yeah, you go ahead.
But we can't give financial advice. But once again, in reference to silver, the paper price, which is 1850-ish right now, is a lot different than when you have to go to the store. So the premiums will make up the difference. So will you have much of a discount unless you know somebody and got the actual connection? It's always a good time to redeem fiat for real money, in my opinion. So
I mean, I've been through this when I started buying gold and silver 20 years ago. I used to think always about the price, and I still do a bit, but most people still think, they get into gold and silver to make fiat dollars.
right.
So unless you're a trader, it's very difficult to say where the market's going to go in the short term. And I advise, if you're going to trade, to do it as a full-time job.
Right.
But when the system is on its last legs, I don't think it's something you should be worrying about, that your insurance is moving around.
Right.
I think there's a guy, I think it's Balin GP. He's got a good YouTube channel. He looked at the price of gold in Venezuelan bolivars, I think, back in 2017, 2018, just start before the hyperinflation. And he was saying, it got up to 12,000, then dropped to 8, and then back to 10, and then it dropped again. And he said, can you imagine people trading and saying, it went to 10,000, it failed to go above 12,000, so I'm going to get rid of my gold. And then a year later, it was trading in the millions.
Yeah, watch this. So just to show you, it's off the charts. So real quick, this is, I typed in gold to Venezuelan Bolivar, and it's off the charts.
But you see, you can't even see where it traded.
Exactly.
So
you can't
is that
see
what's
what the
going to
price
happen
of gold
to
was.
the dollar and the other currency? Who knows? Anything's possible.
Oh my goodness! Look at that.
Venezuela was one of the richest countries in the world in the 50s and 60s.
Right.
And now it's a basket case, and we're becoming basket cases. We don't trust our leaders anymore. And
so just think about this. So in 2008-ish, it was 62,000 bolivars for an ounce of gold. And as of right now,
that's a kilo.
Oh, no, on this side. So this is a kilo on this side. What is that?
Yeah. No, it says kilo. So
ounces on this side, dollars.
Yeah. No, it's in kilos, that it's not in ounces. What I'm trying to say, you have to divide that by 32. So that's the price in kilos.
Okay, so on the other side, it gives dollars as well. So as of right now, so it's 11 trillion kilos, 11 trillion bolivars for a kilo, 364
billion.
No, we got decimal places there. We got millions, billions, trillions.
So go back to 2017, 2018, because I think it was around 8,000. Yeah, you see?
Yeah.
It was around 13,000. And I think the 12,000 level per ounce was a really key level. But and then, let's say you were trying to trade the gold. Yeah, what I'm trying to say, people who are trying to trade gold for Bolivar back and forth, they got, if they got rid of their gold before it started moving, they would have lost everything.
Yeah, clearly. And let me see. So here's the turning point. This is March 2021. It shot up to over 800
No, I think Mike. I think the turning point was earlier. It was
it's earlier, but for this, so this is a newer currency though. This is
I
the
know, but
Bolivar
2017, 2018, it was pretty bad too.
Yeah.
So it's gotten even worse. If you go back 5 years, yeah.
So this is when it was, and this was bad in the Sober.
Oh,
no,
yeah.
So now they got the Soberano. It's the Soberano now, and this is the Forte. So it had been through three different.
It's a mess.
Yeah. So anyway, long story short, you didn't want to be in Bolivars anyway. If you had a choice. So
and I think that's what I'm trying to say. We should not be trying. If you're trying to trade gold for fiat dollars or any fiat things, do it, but be careful. Maybe do it as a separate thing and keep your physical gold and silver and trade fiat for fiat.
Yeah.
Trade the paper gold, but don't trade your physical back and forth.
Right. Don't tamper with your insurance policy.
Yeah.
Add to that in small increments, but then you got your slush fund, your play money, your speculation funds. Sure. All right, man. We about 50 minutes, man. We can go forever, but everybody, appreciate you for joining us. Manico64 on YouTube, Rethinking a Dollar, wherever you can find me. It's always good to connect and just talk and bounce ideas off each other and have a good way to end the work week. So anyway, be blessed, be safe. Any last thoughts, Mario, want to leave us with? I was like putting you on the spot.
Yeah, I know. Well, I don't know. I just think we need to keep an eye out now for the Fed and what comments the Fed officials are making. I think they're starting to get concerned, and I think they could be pivoting soon. I think they will raise rates, of course. I think it's the 27th of July, 26th, 27th is the meeting. But we're having. I think they've tried to get people to back down a little bit because everyone was saying after the CPI, they're going to raise by 1%. So, and I think that's one of the reasons why the stock market is rebounding, because I think it sniffs, something out there. Yeah. But I guess one thing is that don't really believe anything the Fed says, because they're not in control.
Right. I think other than just being the focal point of the mainstream media, as well as what we've been conditioned to think that they have all this power to control and contain, it's already too late, I think. And that's why all the activity out east with the alternative currency is going to probably be announced. If the Fed pivots the way that people are anticipating them to, markets respond favorably or unfavorably, there's going to be also some type of Eastern announcement on our alternative. So it just seems very timely that will be the actual event that makes a true shock to the world. Head into the midterms. But all right, people, be blessed, be safe, enjoy your weekend, stay out of trouble, and get your weight up, get your prayer game up, and get as much out of this old system as it's collapsing as you can while you can. So anyway, be blessed, be safe. See you later. Peace.